I'm excited for tonight because numbers don't intimidate Brie at all. They excite her. So she doesn't just prepare financials, she helps businesses understand what their numbers are saying. Bree works with businesses preparing for funding, scaling, and long-term sustainability, right? Long-term, we're trying to be here for the long term, not the short term. Tonight, she's going to help you turn your financial statements from something you avoid into something that you understand. And from here, Bree, I'd like to turn it over to you. Welcome. What's up? How you doing?
All right. Thank you for having me.
Of course.
I'm going to take over the presentation. I never know how much of my presentation you're stealing.
I always try to keep it to a minimum because I'm like, I know she's going to go and do.
Yes. So thank you so much for having me. Hi, everyone. I know some of you, and I see a client or two in the room, and then I'm just happy to meet all of you and to be able to help you tonight to understand the story that your finances are telling others. I think it is much better to be able to make sure you're aware of the story that you're presenting to others before you do. I saw a lot of people in there with the growth and guesswork. I was just, before he even put it and anyone said anything in there, I was like, can we say chaotic growth? Because that's what I see a lot of times. A lot of people come to me in that chaotic growth stage. It's like, it's chaos, it's disorganized, I don't know what's going on. But hey, we're living and we're growing, and I know I'm making more money. And so it's like, that's all I do know. Let's just keep the main thing. I'm making money, okay? But sometimes we do need to go ahead and clean it up and and be able to get our finances in order. So we're going to talk about that, and we're going to nerd out a little bit. He definitely stole my class a little bit and gave you the Cliff Notes version, but I'm going to go a little deeper. So be okay with nerding out with me. There will be some formulas and calculations, just going to warn you. But we're going to go over the basics first before we even get into that and the parts that really matter. So a little bit about me. Howard already introduced me, but I'm a business owner, so I'm in these entrepreneurial streets with you. I don't get to work for a corporation and hide behind that beautiful paycheck that they used to give me. I've purchased 2 homes. I'm all about building generational wealth. I sold one for a 6-figure profit. That first house, I bought it when I was only 21 was when I closed on it. That was my 21st birthday gift. So I was in the process while I was 20. But it took a few months to close, so we made it to 21. I got my bachelor's from ODU, double majoring in accounting and personal financial planning. Been in the accounting and finance fields for over a decade now, but I'm still young. And then I'm a CPA. And I've been focused more so on the real estate accounting the last 8 years, but I really do help people in multiple different industries. I just started out in real estate and have always held that as very close to my heart. But I do, I'm coming from a top 100 firm, so I've worked with several different industries there and in my own business, from companies making well over $20 million to $100 million to those that are just starting out, and I've helped a ton of startups as well. So I'm very happy to have been helpful in those families. And we're currently building our legacy for our families. And I want to help parents to be able to build theirs. And just a quick cliff note that we didn't put in here. Last year, we were able to save our clients almost $5 million, and we only served 47 families. So I think that is huge impact, because a lot of those people are still startups. A lot of those people are just hitting 6 figures or a little bit over it. We have a couple of millionaires and stuff in there, but that's not, the biggest part. So I'm very happy we make sure we get every credit and deduction our clients qualify for legally. So, all right. So let's go on to the importance. You're welcome, pretty tomboys. I'm happy to be here. So let's go into the importance of financial management. It helps you to have strategic decision making. So, and when I'm talking about financial management, I'm talking about your accounting, your bookkeeping. Getting the taxes done is the end result. That's just really plug and play, right? But throughout the year, it's your accounting and bookkeeping and staying on top of that. And that's so that you can make the strategic decisions to push your business forward. A lot of us, when we're in that chaotic growth, we're going off of our gut, our instinct, and that can only get us but so far, though. it comes a time where you need clarity and to be able to strategically plan to get to the next level. So this is where we get from throwing stuff at the wall and seeing what sticks. Ooh, is it still there? Okay. My thing just blinked. But we go from throwing stuff at the wall to see what sticks to actually moving to a place where we're planning and are being very wise with our decision making and with our funds. It also helps with the profitability analysis. So we want to know, how profitable is your business? Just because you're making more money, if you're keeping less of it, that's not necessarily a good situation. Oh, okay. As long as y'all can see me, I guess it's good. My browser's looking crazy. Okay, I think I can see the chat again. Oh. Sorry, y'all. All right. Okay, we're just gonna go with it, and then I'm hoping that y'all can see everything, because one of my screens is acting wonky. So I'm gonna just put y'all on this other screen. All right. And then, so the profitability analysis. So that's looking to see like how profitable is your business, how you're growing, how fast are you growing, how slow are you growing. And there's some businesses that I've literally seen, they've gone from making only $200,000 a year, $300,000, $500,000 a year, to now they're making $1 million or more a year, but their business is way worse off. Why? Because they're keeping less of it. So if you were making $250,000 a year and kept $50,000 of it, or making $400,000 a year and you were able to keep $150,000 of it, I'd rather you do that than make $1 million to $2 million and be hemorrhaging about $250,000 a year, meaning you're taking a huge L, not a paper loss for taxes, a real live loss out of your bank account for $250,000 a year. Like, it was just like insane. I literally had to tell the client, hey, look, if you keep up on this route, you'll be bankrupt by this date. No one's going to be able to have a job. So those are the things that we're looking at, making sure that you're actually profitable. It doesn't matter if you're making more money if you're keeping less of it. So we need to make sure that you're keeping more of your money. That profitability analysis is going to make a world of a difference, because it's not just about how much you make, it's about what you keep. Budgeting and forecasting, being able to budget. You need a budget for your business. You need a budget for your personal finances and your business. And that is going to make a big difference so that you can plan for the future. Now, we're not we're not fortune tellers. We may be storytellers, but we're not fortune tellers. We cannot see into the future. And if you know how to, we need to talk. So, but majority of us, we cannot see into the future. Okay. So with that, we need forecasting. We're trying to make sure that we are, for the best of our ability, making strategic and educated guesses on what's going to happen. It's okay to have some guesswork involved, as long as you're actually making sure it's an educated guess, right? So we want to be scientists. We don't want to be gamblers. And so that's going to make a big difference in our business. And then long-term sustainability. We're looking to not just be able to have the business for now. That's why I love Tanya said stability. That's my client, by the way. So long-term sustainability is important. You don't want to be one of the 85% plus of businesses that fail within the first 5 years. You want to have a business that's going to last and hopefully outlive you. I want you to have the beautiful problem of what is going to happen to this business when I'm no longer here. Am I passing it down? Am I going to sell it beforehand? What am I going to do with this business before I die? Because it is so good and it's going to last. Like, it's not going to die with me. That's a good problem. And then stakeholder confidence. So how you handle your finances, the stakeholders are first and foremost you. You're the number one investor. You're investing your time. You're investing your money. You're taking the time that you could be spending working at someone else's job to build their dream to instead build your own. You're also taking the money and time that you could be spending with your kids. You could be spending on other things to also build this thing from scratch. Because if we're real business owners, we know that it's actually a lot more work. You don't just get to clock out at 40 hours. You don't just get to have 8-hour days and have a sustainable business. Like, you actually have to grind it out at first. You may be doing 8 to 12-hour days sometimes. I mean, sometimes you're eating, sleeping, breathing the business. But the point of doing that is so that you can get to the next level and be able to have more freedom than anyone else will ever experience in this lifetime. It's not for you to be stuck in that hamster wheel. If so, you should just go get a job. Go get a job. You can clock out and not worry about things afterwards. So you need to have confidence in your business. The other thing is that any lender or investor that you go to outside of you needs to have confidence in your business. So you're the first investor, but there are also others, and we need to make sure that they can have confidence in wanting to invest in it. Even a loan is an investment. It's just at a set amount that they're going to get as a return. Okay. They're investing their money in to get X amount out. They're not investing it for you to go bankrupt. So that's something important to be able to, understand and just having your spirit. It's just that they don't own a percentage of your business. Thank God. They're just going to get a certain return on their money, and that's it. So we need to look at that and make sure that you have confidence in it before you ask anyone else to have confidence in it. And then that it's something that they can lean on and can feel like they're going to get a return. So first, we're going to go over your profit and loss statements. There are going to be 3 main statements that we discussed tonight in review. The first one is your P&L. So your profit and loss. So that's letting you know how much money are you keeping. It's allowing you to see all of your revenue and expenses and how much are you actually able to keep, not just spend. And that's going to be important, right? So here's an example, and this is like old school QuickBooks, how they would print it out. And showing the next 5 years, right? It's not just showing what we're doing this year, it's showing what we're projected to do for future years. And with this, this is showing, hey, gross sales were $19,130. I hate that it says net because it truly is the gross. These two are definitely mixed up. So your gross sales is just how much you brought in, right? But then you have how much did it cost for me to be able to bring that in. So for any of my product-based businesses, I don't know what you guys do. Yes, you should. You said, should we concentrate on a multi-year plan as well? Heck, yes, you should. You should definitely be planning for the future. Like I said, we are not future tellers, but we do want to plan for the future and be able to have something that we can have as our foundation, even if we have to deviate, because nothing's going to go perfect, but we want to at least have some kind of structure plan in place that we plan to go forward with. So yes, you should concentrate on having a multi-year plan. But yeah, so this is then showing if we have any product-based businesses. I don't know what kind of businesses you guys have. If you could put it in the chat, I'll look at it and see, so I can tailor my talk even more towards you guys. But let me know, what kind of businesses do you guys have? I'm going to use my client as an example. So cost of sales will be like the chicken for the Rasta pasta, the shrimp, things like that. So those will be cost of sales. A salon studio, commercial cleaning, logistics, transportation, cleaning business, pet washing. Ooh, pet washing, grooming spa. I have a poodle. I need to talk to you, Jenny. Catering. Okay. Home renovations, interior painting, nonprofit. All right, so this is going to look different for everyone. Those of you that are completely service-based, like I'm service-based, so I don't put anything in cost of sales. Could I put like accounting software or something like that there? Yes, but I choose not to. So more so cost of goods sold, cost of sales is going to be used by my product-based businesses. So that's going to be more so transportation, not too much. You can maybe put fuel there. That is a big one that we use, is just put fuel there for my transportation and logistics companies. The other things that we're looking at is your operating expenses. So sometimes you don't have it broken down this way, but this is a great way to see, like, how much does it cost to just operate the business, right? So no matter what you're doing, you're going to have like pay rent. So that's something that goes under our operating expense. You got to pay for the building. That goes into those that are admins and things like that. Also, it goes into the cost of sales, being able to have a nice office to sit down with people, right? So those are things that may go there. Operating expenses, they had put like advertising. Overall, yes, that can go there. So there's different kinds of operating expenses. That's more so, and then you have like your general and admin as well. So what does it take to operate the business? What is it that's going to be kind of general and administration? Renting a storage unit, yes, that just goes under rent. That's an operating expense or a general and admin. Some of these things can go into multiple categories. You just go with the one that's going to help you have the most clarity. It's not just like a strict way to do it. You have to do it in a way that is compliant and then that gives you clarity. So those are the top two things that we always want to do. So you'll break it down and see how your expenses are flowing out. A lot of times I like to start with, for my chart of accounts, which is basically all these categories you see here. This is part of your chart of accounts. Also what you'll see on your balance sheet. This is a part of your chart of accounts. This chart of accounts is just a fancy word for a piece of paper that shows every single account name. That's it. Like, so just your categories. So what I like to see up there first and foremost is every single category that shows up on the tax return. That is first and foremost, because if I have everything that's going to show up on the tax return for Uncle Sam, then I'm already starting at a good place. And then I build on my chart of accounts from there based on the industry, based on what is needed for us to make strategic decisions and analyze the data so that we can move forward. So those are the things that I'm looking at. Your P&L is going to go over all your money that came in and all your money that went out as far as income and expenses are concerned. It's not going to cover anything that you invested in the business. It's not going to cover anything you took out of the business for personal use or to pay yourself. It's also not going to cover debt except for the interest paid towards the debt. So those are the things that it's going to cover. It's covering your income and expenses. Everything goes on up here. And the thing is to always make sure that you have net income. Because if you're making more money, just because this part grows does not mean automatically that this part grows. Because I don't know about you guys. Does anybody else ever get like shiny object syndrome in their business? Or was it just me? Where you get into a place where it's like, I just need this other app. I just need this other teaching. I just need this other coach. I just need to hire this other person. I just need to hire this more thing. I just need to buy this software, whatever the case may be. And then once I get that, I'm going to be all right. Or this is going to push my business to the next limit. Yep. Okay. And Howard, I saw your hand up.
Oh, no, I meant to say, yeah, me too.
Oh, okay. Awesome. So I definitely get into that shiny object syndrome, have been there, where it's like, let's just try the next thing. This is going to be the thing that make it all pop off. And I have really gotten out of that because I have got burned, screwed, and spent a ton of money that I didn't have to spend, that I could have used towards something else, doing it that way. But that's part of being in that space as an entrepreneur, where you're just throwing stuff at the wall and you're seeing what sticks, what's going to stick, what's going to work. I don't know whether it's going to come from here or there, right? So now you have to then move from that space to now let's look at everything and see if it's actually working. What do I actually need from this? So this is even on this slide deck, but I like to go over it in some of my other trainings. I condensed a lot of my different things that I was using and got rid of a lot of software, a lot of apps. I'm a tech junkie. So I bought a lot of different software thinking it was going to be the next thing that we needed, the team needed, whatever the case may be. When I do evaluations on my staff, I have them evaluate me and the business as well. One of the questions I always ask is, do you have everything you need to do your job successfully? They used to tell me, no, we needed certain products. I went out, I bought them all. Now they're like, we're good to go. We have more than enough. And so part of that is making sure that everyone has what they need to do their specific job well, but then also condensing after a while, because sometimes those apps can do all the same stuff. Is a template for business owners to use that is free to low cost. For P&L, there's plenty. I think if you open up Excel, you'll find some. Let me see. Let's go to templates. I may share this screen with y'all. Nobody sees that. All right, I'm gonna share. All right, I'm gonna share that whole screen with you guys. So are there templates that you can use? Yes. You see, can y'all see my screen? Okay. All right. So if you go into here, it has your budgets. That's first and foremost. It's trying to show you, oh, you can do this budget, you can do that budget. Here's some calendars. You can find whatever you want for free or low cost. And the value is going to be free or low cost too, right? This one looks cute. It looks sexy. You can use it if you want to. But I think that your business is worth investing like 20 to 30 bucks in a month. That's what I think. I mean, you can use something like this. You could do it manually, item by item, expense by expense. You can add it all in. Every time you spend money, you can come in here. You can find the right category and you can say equals 10 plus 30 now, equals 10 plus 30 plus 80 now, equals 10 plus 30 plus 80 plus 15. I mean, it gets, because if you miss one thing and then you don't even know what the 10, 30, 80, and 15 are anymore, then you're like, dang, what was that? Or what expenses is where and why? This is an accountant's nightmare, and it will be your nightmare too after a while. Can you do it? Can you survive off it? Yeah, if you're in your first year or two, okay, it's cute. But if you are in years 3 through 5, it's time to get serious about your business and at least invest 30 to 40 bucks a month in it. And I would get some accounting software. And that's not a shot at all. I mean, we have to be savvy. We have to look at ways that we can save money at all times. I'm always about that, but I do think that it's valuable to have good accounting software, bookkeeping software that is going to keep you ahead. So I do use QuickBooks. I always recommend QuickBooks because I've tried all the other apps and I did not get the same results that I get out of QuickBooks. So I'm only a champion for it because it works. And I only get like a few bucks if people sign up for it from me. So it's not really even that. They still owe me money. I don't care about that part. I care about giving you something that works. There's other people that would pay me to recommend their service. I just don't like it. So that would be the one I would recommend. I think it'll be great. But yeah, so I like being able to have the data I need to analyze that. So this is all your income and expenses, and prayerfully we're seeing our net income increase as our gross sales increase, right? So that's where you would want to make sure you consolidate as many of your expenses as you can. If you have apps and things that are redundant and that you have 2 or 3 things doing the same exact thing, then I would look into consolidating. So like an example of that is right now we're on Google Meets. So those that choose Google as their workspace, they could be using Google Meets for all of their meetings instead of going forth and getting Zoom and paying the extra money for that. If you meet with me, I'll get you signed up for it at no cost to you. And you still get a discount on it. I think I'll be able to get you 30% off, and I can help you choose the one that is right for you. But that's fine. I was responding to Jenny. And anyone else that doesn't have one, I can always help you get signed up for the right one so that you don't pay more money. Because I always sign people up for the cheapest one that they need to succeed. But yeah, so anyone that has Google Workspace, you don't need Zoom. You don't need maybe certain apps anymore because there's so much in Google. The same for me. I went to Microsoft Teams. I used to be with Google Workspace. So that replaced my Google Workspace when I went to Microsoft Teams. It also replaced my Dropbox because I now had SharePoint, aka OneDrive, you name it. And I like that. I didn't like the Google Drive. I didn't think it was secure. But I know Microsoft is. And that just may be a stigma that I had. It may or may not be true. because I know a lot of people do use Google Workspace, and I would hope it would be very secure, but I'm just really skeptical about that because I deal with social security numbers. So I just need the most secure thing that I can get. Then you could also be able to remove, I was able to get rid of like Dropbox. I was able to get rid of Zoom. I was able to get rid of Google Workspace. I was able to get rid of so many other apps that we were using. We no longer even had to use certain free apps like Trello anymore, or different places just logging in. Sometimes it's just the time clutter of it all, right? Because now we have the planner, and now we have Teams. We didn't need Slack anymore. I mean, we got rid of a lot, all by moving to Microsoft. So look at what you can condense. Sometimes we buy all those shiny objects, and then it's time to go ahead and actually analyze them and see, is that actually making a difference, and what can I get rid of? And especially with AI, I know everybody's trying out all the cool new things, seeing if it can do it cheaper and better and faster or not. And that is something to always look into. After you've tried it out for a while, I wouldn't give anything more than 90 days before I look at that ROI. And the ROI is, okay, you're spending $50 extra a month. Did you make more than $50 extra a month now because you got that? Or are you just losing more money each month because you wanted to try that new tool out? So always, I give things 90 days, and then we evaluate and see if it's worth continuing forward with. The next thing is the balance sheet. So this is going to show your assets, your liabilities. What does that mean? Those are the things inside of your business that allow you to make more money. So your cash, you're able to invest it back in your business to make more money, right? You can definitely have investments if you want to. So that's that marketable securities and that little cute stuff. Sometimes we don't get to start at that level though. But then it's going to be things like your building. If you own your own building, it'll be your equipment that's really expensive that you had to buy. It's going to be a vehicle if you need it. Real estate agents usually will have like a vehicle or something there. So these are different things that help you to be able to make money that are owned by the business. And that's going to show up on your assets. Then here are your liabilities. This is just all your debt. People you owe money to. So that's all your debt, and that's what's going to go there. And then it's going to be your shareholders' equity. So this is going to show how much money you've put in and how much money you've taken out, and kind of where you are standing at in the business. Do you have a net investment, or do you have, or have you just withdrawn from the business until you can't anymore? Have you gotten down to zero? So equity is saying how much have you put in versus how much you've taken out. That retained earnings, you want to clear that out every year, but that's just kind of showing you your net profit. So based on your retained earnings, that's showing your net profit in the business. I wish that it would have the arrow showing whatever I wanted to, but let's just point it towards that retained earnings. So say for the year, these are different companies. I literally just pulled these offline, so these are no real clients. But let's just say you made that $93,000 that year, right? And you kept it inside of the business. Whatever your net profit was, that's going to be your retained earnings. And then if you took out some of that to, feed your family, take care of yourself, then that's okay, but that's going to be reduced, and what's going to be here is going to be reduced. Common stock and additional paid-in capital, APIC is what we call it in accounting, all this nerdy stuff. This is what happens when you're a corporation. Majority of you are going to have what's called like an owner's draw or owner's distribution and contribution account. That's it. Or a partner account if you have multiple owners inside of the company. You're not going to have all this fancy smancy stuff. I have an S Corp. I still don't put all this foolishness right there. I don't need to see how many stock. It don't matter how many stock I have. I own all of it. So it's just like there's no partners. It really does not matter. It's just a number in the sky. The important part is just being able to see how much have I invested in the business versus taken out, because that also determines how much is taxable. If you put $50,000 into the business and you took $45,000 out of the business, you do not have a taxable event. You just got your money back, right? If you put $50,000 into the business, if you took $100,000 out of the business because, we did great, right? You do have a taxable event because you got your money back and then some. And so that's going to be determining, how much it is that you're responsible for, but then also for us that are smaller, that don't have like a corporation where it's just like, oh yeah, there was a profit, but I didn't take it out. It doesn't matter. When you're 100% owner of the business, if you're in an S corp or just have an LLC and you're the only member in it, and and it's filed on your return, whether you took that money out of that bank account or not, you owe taxes on the full profit of the business. So that's what you're seeing up here. And so what we want to see is to make sure that it's healthy. One, we don't want you to be in the negative. We never want this to be a negative number when it comes to your overall owner contribution / distribution. 0 is okay, not preferred, but we definitely don't want to see negative. A lot of times also is looking at this debt, and if it is way more than what you have here, like, see, we can see based on their assets could more than pay off their liabilities. And the way it works is always assets is equal to liabilities plus owner's equity. So we definitely don't want assets and liabilities to be equal. We definitely don't want the liabilities to be higher than the assets that you have. And sometimes even if on paper it looks cute as though it's not, because these two numbers are always going to match in some way, shape, or form. The other thing is say you bought something, it depreciated heavily in value, but you still owe more on it, and as far as debt is concerned, than the property is worth. That can end up being a problem for you. Because you're now in the hole, so you got to hurry up and get rid of that debt so that you're not underwater. So these are things that people are looking at. This is what a banker's looking at, what an accountant is looking at. We're looking to see also, where did your money come from? Why do you have that money in the bank? Because just because you got $38,000 in the bank doesn't mean it came from sales. It could have came from you getting a loan from somebody. So that's where, like, we can get part of that picture definitely from here, because if we're seeing that, oh, okay, here's their debt, and then here's the money they have in there, maybe it all came from that, or we look at that and compare it to the profit and loss, and we don't see enough profit to understand how we got to these numbers. Sometimes this will tell us. But if not, we have your statement of cash flows that's going to tell on you every time. And it's going to say where money came in from and why. So that's going over, okay, this money came in from operating activities. Operating activities mean I ran my business and I made money. That's it. Because I ran my business, I sold a service that was very valuable to someone. I sold products that were very valuable to someone. I was great at washing those dogs. Like, I made money, and here's my net income. But then we're also looking to see, okay, why did money also go out of the business? Oh, well, this is being added back. This depreciation and amortization expense, they're adding that back because that's not a real expense. That's not cash flowing out of your business. That's just a paper loss so that we can deduct it on taxes and not have to pay as much, right? So that's just saying, oh, the value went down. Maybe it did, maybe it didn't. But when we get into your accounts receivable, so how much money do people owe you? Oh, how much money is owed to you from people, from services that you've already completed? What's going on with these debts that you owe? This is a decrease in accounts payable. That's letting me know money went out to take care of and pay those loans off. Versus it could come in from you getting a loan. See, proceeds from a business loan. That's going to show down here in financing activities. So we see $200,000 in the bank, but $150,000 of it is from this loan. I don't know how healthy that business is actually, So those are the things that we're looking at. These are like, your accountant goes through it, but a lender is going through this with a fine-tooth comb. An investor is going through it with a fine-tooth comb. Why? Because they're thinking about giving you their money. And they want to know, how likely is it I'm going to get it back? Because believe it or not, banks are not in the business of helping people go bankrupt or losing money. Like, you think they're too big to fail? Yeah, a lot of people did, but the government had to bail a lot of banks out because they maybe betted on some of the wrong people. That's why it's so much harder to get a house nowadays, because these businesses, they're a business and they're not in the business of losing money. So they're looking at this and they're looking at it with a fine-tooth comb. And then a lot of times banks are going to want to look at, what did you say on all of these statements? And then what did you tell Uncle Sam? Because if your tax return say something completely different than what this bad boy say, it's a problem. They may not trust you. And they're going to be looking at the things such as depreciation and amortization and things like that. But they want everything to add up. They want to be able to say, you said you had a profit of $13,693 here. I want to see it over there. Ain't no way you going ahead and showing me this P&L and it say you got $93,000 that you made, but then you told Uncle Sam you only made $15,000. Hold up, wait a minute. How much money did you make actually? So that's where a lot of times they then want to make sure that your statements were prepared by a CPA. And there's a difference between a CPA and an accountant and an EA. And you guys need to be aware of those things because there's a lot of people that can call themselves accountants. Guess what? You can call yourself an accountant tomorrow. It's not regulated. Nobody's going to check you. Except for maybe another accountant. Maybe. But accountants are usually introverts. So nobody's going to check you. Like there's no board over just regular people calling themselves accountants. Also, if you or anyone you know that is 18 and older with $19.95 can be a tax preparer tomorrow. You can get a P10 and you can legally file taxes for people. Does that mean you know what you're doing? No, but it means you can do it. So those are things to look at too. So a lot of times the reason why banks want you to have a CPA is because we have to have a bachelor's degree. We have to have credits work, meaning that we have enough to have had a master's. I double majored and then still had to go to school for a few more classes to hit the 150 credit hour mark. We have to do 4-hour tests on everything accounting. So we have to be able to know how to get your books in order, how to make sure it's in compliance and with the regulatory and regulations that go into it. And we have to be able to know how to do it for the biggest corporations to the smallest. We have to then have and that's just one test. And then we have another test that's just on laws and stuff. We have another test that is just on taxes. So we have to do 4 different tests and they're each 4 hours long to prove that we actually know what the heck we're talking about. And then that's why a banker is going to tell you, I want CPA prepared statements. And we are a fiduciary. We are a fiduciary. We have to do what's in the best interest of our clients, and we are governed. We have a Virginia Board of Accountancy. Different states have boards of accountancy, and then we have the AICPA that oversees us. So even though I can service clients all over the nation, I am still governed. If I do stuff wrong, I can lose my license. And I tell you, I love learning, but I ain't want to learn another thing after those tests. There is nothing you can get me to do to go ahead and get rid of it. Like, someone wanted to give me a few $1,000s this past weekend, and they was like, I ain't got time for you to actually look at everything. I was like, you can keep that money. Either I'm coming down and I'm gonna look at all the statements and do a proper review, or I'm not doing it at all. I'm not just signing off no papers and saying that your books are good, because you're not worth it. I'm not going to jail and I'm not going back to school. So those are the things to look at. And those are the things that your bankers are looking at too. So they want to be able to make sure that what's on that tax return and what's on that P&L matches. And if it does not match, it has a viable reason that easily a CPA can give you. Because there's a lot of people making fake businesses and all sorts of stuff on tax returns nowadays. All right. So the importance of it. So we kind of talked about that earlier, but again, it's about decision making for your business strategy, right? So if you have these documents and you're able to read them and know what they're saying, know what picture is painting, and you're able to know what it's telling you about your business. I had told someone else, I was like, you do not want to find out just at this time this year that your business had 3 strokes, a heart attack, and a seizure last year. You don't want to find that out now. Like, is it dead? Like, now you like, hold on, can we revive this? Like, hold on, wait a minute. Like, that's not something to find out this year. You also don't want to find out that you made $150,000, but your bank account is at 0 because you had a YOLO moment. It was like, ooh, I'm going on all the vacations. I'm going to pay this. I'm going to pay that. I'm going to go here, there, help all the family members out, and you have nothing to show for it. So it's going to be able to make sure that you're making the proper decisions in your business. It's going to help you to know how profitable am I, how well am I doing, and how close am I to hitting my goals, because you forecast it out, right? That's where that forecast and that budget comes into play. This is what I plan to happen. This is what actually happened. Is that a good thing or a bad thing? Those are the questions you got to be able to answer to yourself before you get into front of a banker and have to answer those, right? The other thing is just demonstrating financial health to stakeholders. So it's going to tell those people that are looking to invest in you, how well are you doing? Am I doing good or bad? Sorry, guys, I'm just listening to see if that's a janitor or one of my kids. I'm in the office. So, but how well are you doing? So it's demonstrating your financial health to stakeholders. And then you do not have to take money out of the business. No. And then it's also attracting investors and creditors. So it's going to attract people. If they look at your financial statements, some people want to give you money because they know they're going to be able to get it back. They want you to pay them interest, right? A bank wants to give out loans because, hey, if I let you borrow $50,000 and I get $60,000 back or $70,000 back, that's a good deal, right? So they want to be able to bet on you. It attracts them. They want to give you money. You don't want to have to take it though, but they want to give it to you so that they can get that and then some back. So it's going to attract investors and creditors when you have proper financial management. And then you're also building a foundation for financial planning. So having good books, having your QuickBooks in order, having your bookkeeping software in order, even if you choose to use Excel for a season, it's okay if you start there. It can at least, because it's much better than just having receipts in a bag or in a shoebox under your bed, okay? So having that and being able to look at something is now your foundation for how you're going to plan for the future. But you can't plan for the future if you don't even know where the heck you're starting. So, and we don't want to always be trying to start from zero because we just don't know, or just be guessing on what we can do. No, let's look and analyze the data. Let's see what we did and how we were able to accomplish it and then build from there. All right, so I promised you guys I was going to give you some formulas. So here we have it here. So this is like your gross profit margin. You can choose to have these or not, but these are things that we look at, right? So we're looking to see, okay, based on your revenue and what it took for you to make that revenue. So these are my people that are more so having product-based businesses. So, if you sold 50 shirts, but it cost you X amount to make those 50 shirts, then we're going to divide that by the total money that came in, and that's going to give us your margin. Margin is just more so saying how much room is there, how much money is being made based on that. How much money is left also. So your gross profit margin, you can see it here as a percentage and things like that, but you're also going to be looking at, okay, how much is just left? You also have the gross profit margin where you take that and you minus that and you say, this is what's left to pay the rest of the bills for the business. Because when we look at that P&L, that gross profit margin is at the top. You still got to pay rent. You still got to pay for supplies. You still got to pay your employees. You still got to pay so many other things. So it's just like, what is left to help take care of the business? And like, what is our margin? And it also varies. What's a good number for this is going to vary per industry. And per client. So based on like your sizing and things like that. Then we're looking at your net profit margin. So how much margin is there? So after all bills and everything is paid, are you taking away 20%, 30%, 50%, 80%? What is it? And again, this varies. So like taking home 20% for a net profit margin, if you are a restaurant, is good. Because restaurants are very high expense businesses. So they're known for having low profit margins. But if you've also figured out how to do it and have a 50% profit margin, then you are killing it as a restaurant. And you need to continue on the path you're on. 20% is no longer your benchmark when you've proven you can do 50. Unless you your only employee and then you got your children working for you for next to nothing and y'all all burnt out and don't ever spend time together with nothing but cooking in the kitchen for other folks, right? So then maybe it's not. Then maybe we might need to go ahead and say, okay, it's okay to make a little bit less if I get to share with other folks so I can actually spend time with my kids doing something else, right? But that's going to vary. But then for consultants, we can flip that on the head where a lot of people are now in an age where you can work from home. You don't have to rent an office. You don't have to have this kind of space, all of those things. And so you can keep way more of your money. And you may be able to see 80%, 90% profit margins. There's some people that have very little expenses. But guess what? While that is beautiful, that means you're going to pay a lot of taxes because we ain't got nothing to do. You made a lot of money and you kept majority of it. Great. Just know you're going to pay a lot of taxes. So make sure you put aside his share before you go crazy with it. Put aside Uncle Sam's share before you go crazy with the money. So that's where it also comes into play. Like, how can we put this money back to work for you in a different way, in a more tax efficient way? So that's where tax planning is going to come into play for you. Then looking at your return on investment. So like I told everyone, we want to be analyzing our relationships to what we're spending money on every 90 days. So if you get new software, evaluate how it has helped you over those 90 days. Now, this is going to be looking at profit, but remember, that's only one factor. Sometimes your peace is a return on investment. You are just way more peace. You have a whole lot more peace. The other thing is that you could be able to like get more hours of sleep. You can maybe focus on your health. You done lost a lot of weight because you're not doing all of this all the time, right? So there's other returns on investments besides money, but I still want you to analyze that return every 90 days. Are you getting what you expected out of this? Money is one factor, and this is how we compute the money aspect of it. But I still want you to analyze it, and you can even create your own little worksheet and say, hey, these are the things that I'm looking to be able to have as a transition or make a difference in. These are the things I want to see a return on. Because maybe you hired someone else in the business, in the company, and they're doing a great job. And at first in 90 days, you're not going to be able to see higher profit margins, but you have more time. You have more rest. You can go to the gym more. You're drinking more water. You're yelling less. Like, I don't know. Like, there's other factors, but this is just the monetary factor. Right? If you're no longer having to work on your accounting or your bookkeeping and it's taken care of by a trusted CPA, then now that's one less thing that you got to worry about and stress about. And you're now able to meet with someone that they go over and tell you what your numbers mean, and you're learning. And it's not just, oh, they did it for me, but I actually understand what the heck is going on there so I can check them and make sure ain't nobody stealing from me. Those are things to be looking at. So ROI is super important. And then your operating expense ratio, not always as important, but it's just looking to see how much of your revenue is your operating expenses taking. Is it taking 50% of your revenue? Is it taking 30%? How much is it? It's indicating the cost efficiency of running the business. How efficient is your business? And that's why we want to play the game of how low can we go. That's where it comes into consolidating those software, those apps, those shiny objects down, and only sticking with the ones that have given you that return on investment, and getting rid of everything else that doesn't. Getting rid of all the things that have repeat things that it's doing. You don't need 5 different apps that do the same thing. So, you do your little Venn diagram, and if they crossing over too many, something got to go. Something got to go. So those are the things you want to look at as well. And your quick ratio, this is just seeing like how quick will you be able to pay off your debt? So how much margin do you have to be able to pay that off? Again, so it's looking at your current assets. That's just your money, your assets. So that's your cash or cash equivalents usually. That minus inventory divided by your current liability. So that's the stuff that you owe within 12 months. So current assets is money that you can have in your pocket, things that you can make liquid within 12 months or less. So it may be a CD even, or things like that, or even some marketable securities. And then you're looking at your current liabilities, things that are going to be coming due within the next 12 months. Can you cover it? How many times over can you cover it? So if it's less than 1, that means you ain't got it yet, but it's okay. Like now you know the information, you know how to pivot. And then emergency fund ratio is very similar to the quick ratio, but different. This is being able to say, how many months do you have before you run out of cash? How many months can you take care of your business before all the money's gone? And this is my favorite ratio. When I learned it, it became my favorite. I was like, oh my God, this is so important. And I'm a nerd. So I get it. You may not find it as exciting as I do, but just to be able to know I got X amount of months until I'm out of money. At heart, I'm a hustler. I come from hustlers. So it's just like, oh, we're going to get it. We're going to make sure we extend that out. We don't want to know that we only got 1 month until D-Day. Like, that's not it. It's time to grind it out. So yes, okay, it makes sense. Happy someone else likes it with me. So it's just like, I want to know, do I have 3 months, 6 months, 12 months? And I always say for entrepreneurs, I want you to have a 6 to 12 month emergency fund because there's so much volatility. I've seen plenty of $0 months in my business. I've also seen plenty of negative months in my business. Why? Because I still had to make payroll. Still had to pay my people, still had to pay for the software, even when clients weren't coming in yet. So we need to make sure we have money and cash to get us through the months that we're not making money. Because it's not guaranteed anymore. Nothing is guaranteed when you're in business. It's also not guaranteed when you're working for someone because they have all of this stuff going on behind closed doors that you have nothing about. All you worried about is, did my check clear? But they're worrying about, okay, can their check clear and can I also pay myself and make sure my family's taken care of? So these are things to make sure that you have your business in healthy space. I take it really heavy. It's really a big deal to me that I can take care of my client or of my employees. I love taking care of my clients, but it's really important to me that I can take care of my employees. Because when they signed up to give all of their time, energy, and effort into my business to build my dream, I said, I'm going to pay you this so that you can take care of your family. So it's really a big deal for me to make sure that I can pay my people. So that is something that you want to make sure you have an emergency fund because it's more than about you. And you want to be able to hire others to be able to help you because that's the only way you're going to scale and grow sustainably. And so you need to make sure you have an emergency fund that makes sure that whether a client pays or not, your people are taken care of and that you don't touch that money that's in there for that emergency fund for that reason. What about having to fund jobs months before a payment, funding it out of pocket? Willie, what industry are you in again? I'm going to scroll up, but what industry are you in? Home renovations, interior painting. Okay, we don't do that. And this is why we don't do that. So I require, my clients know I require money up front or we move at the speed of cash. Why? Because I'm not a bank. I'm not in the business of being a creditor. I'm not in the business of putting people into debt. I'm in the business of getting people out of debt. So we move at the speed of cash. That way it's no harm, no foul. What you pay me is what speed we're going to move at. So when I say that, with doing the home renovations, okay, so those are bigger companies and you want to be able to get those contracts. Still, you're a business owner and you set the contract. So if you do a great job, the same way you need them, they need you. There are a lot of contractors and construction people that do crappy work. There are a lot of people that are not reliable in that space. So if you have proven yourself to be reliable, maybe at first you have to go ahead and fund the job at first, but then you can require a deposit. Even if your deposit is only to pay your guys and to pay your, and to pay for your supplies. And then you can do it in increments. You can do an installment agreement. Hey, you don't have to pay 100% up front, but we need X amount down, 20% down to be able to cover the cost of materials. And then guess what? In 14 days, this is due. Why is it due in 14 days? Because I got to pay my people for doing this work. You're going to have to pay us these installments. And if you don't pay, that means I can't take care of my people, so we ain't coming to that job. Your check better clear or we won't be there. That way it's no harm, no foul. I don't have time to be owing people money that I can't pay them because I'm doing this job for you. So I would say that that's really important. Now, the government is a different beast. The government is extremely delayed, but usually it used to be like within 99% certainty, we could pretty much say we're going to get paid from them. I feel like that certainty and trust has dropped significantly, maybe to like 80% or so. We're hoping we're getting paid sometimes nowadays because people playing games. They just firing people out of nowhere. People are playing games, right? And so you write your contracts. You are a business owner. You don't have to take just what anybody says, no matter how big they are. Like I had a client and they were my biggest client at the time and they were paying me about $15,000 and I was like, oh my God. And they wanted to say, oh, okay, do I have to pay up front? I'm not used to that from accountants. I said, I usually pay at the end. I said, yes, you do. I said, yeah, you have to pay up front. I said, because I'm not into, I'm into helping people get out of that, not into that. I'm a small company. I don't have no collections agency or any of that. I need my payment up front. We move at the speed of cash. You don't want to pay me the full 15 grand? Okay, you can pay for 2 returns at a time. You do it however you want to do it. But we only gonna work on what you done paid for. That's it. No pay, no work. That way we ain't got no hurt feelings. I'm not over here cussing and fussing and having to go ahead and pray to Jesus to forgive me. And you ain't got to worry about thinking you got over on me. So you just have to set your contracts up and they paid in full. After I explained to them, like, yeah, I'm not in a collection agency, you can see my reviews. I have 5-star reviews, 22 5-star reviews. These are the things that I have in place. I'm reputable. I do what I say I'm going to do. But now it's your turn to be able to see if your reputation says the same about you. If you're going to pay up front. I don't know you. You don't know me. But you can see my reputation here. I can't see yours there. You pay me the money. That's going to establish some trust here. So, and you can build trust. I've done payment plans. But you do need to make sure that you receive what you need up front. You shouldn't have to go get a loan to do the work for somebody else. And sometimes it's building that reputation, but you can build it in a way that works for both of you. You can build trust. So always look at ways that you can creatively do things. You don't have to just accept that this is how they always done it. Now, the game changed, baby, because you got me now. Hello, I'm here. This is how we do it. How they did it ain't my business. I don't care. How the industry does it ain't my business, and I don't care. How we do it at B.D. Smith Wealth, how we do it at Willie Gerald Home Renovations, how we do it wherever is different. And so, and if they want to work with you, they'll respect that. All right. So why do banks care? They're looking at how are you worth me putting my money in? Again, they're in the business of making money. So they're looking at how likely is it for me to get my money back? Your credit score is really just saying, how well do I pay back debt? So they're looking at your credit worthiness. And they're also doing a risk evaluation for loans and financial support. So they're wanting to see, is this person stretched thin? Can they even afford to take on yet another loan? Is it a good idea for me to give them XYZ? Those are the things that they're evaluating. So they're doing a risk evaluation for loans and financial support. They're looking to see what they can do and how they can get that their risk down and make sure that within some kind of certainty that they're going to get money back and also make a profit. So, and then another thing that I just have to say while looking at this and talking about credit worthiness, 9 times out of 10, you are going to have to guarantee your loan. A lot of people be talking about go open up a Uline account, go open up this, that, and the third, and that's how you're going to build business credit, and then you ain't got to sign nothing. Majority of the loans and the loan officers I've spoken to, business loan officers, they need you to guarantee that thing. Why? Because over 85% of businesses fail in the first 5 years, and if your business fail, they still want their money. They are not in the business of you being able to just be like the guy said on TikTok, to be able to claim bankruptcy for the business. You ain't got to pay it personally. And then you just go start another LLC for $100 and keep it going. And you'd made off with their money like Bernie made off with all them celebrities' money. They are not playing that game. So please understand that they do want you to personally guarantee it. So your personal credit needs to be in order. And how you handle your personal finances is more than likely how you'll handle your business finances. And if you do handle them separately, where you're good at one and bad at the other, one is about to catch up. Because you about to be on the same page with both of them. Whether it's going to be bad with both or good with both, it's going to catch up. So how you do one thing is usually how you do all things. And so it's really important that if you're good on your personal, then it's important to invest to make sure that you're going to be great with your business. Especially since your personal is about to be depending on your business once you go full-time in it. For those that are not full-time in business. And those that are already understand. However healthy the business is doing is how healthy we doing at home. How much money we made this week, how many clients signed up with us is determining whether or not we going to have a great weekend or not. Sometimes that's just real. That's just what it is. So They're assessing your credit worthiness. They want to see how risky is it for them to give you this money. How likely is it that they're going to get their money back? So here are your resources. I talked a little bit about this. Know the difference between an accountant, a bookkeeper, a CPA, a tax preparer, right? An EA. An EA is someone that has at least taken a test to show that they're pretty good at taxes. That is the difference, but they don't understand bookkeeping. They don't understand necessarily how to organize your finances and to make sure your accounting is in order. Why? Because they never even had to learn about it. It's not in the EA test at all. It means that they understand taxes and can represent you. But a lot of times I cleaned up a lot of messes for them. An accountant, again, anybody can call themselves an accountant because nobody's regulating it. Anybody can call themselves a bookkeeper. No one's regulating it. What is a credit score that banks look for when determining credit worthiness? It varies per bank. Some banks are at 620. I've heard a lot. There's some banks that go as low as 580. You don't want to go there. Get your credit score up to at least 620 or higher. Some banks set it at 650. So it just depends. And it depends on how great of a product they're offering and also what you're looking for, right? Yeah, 580. When you got a 580 credit score and you qualify for something, just know that your interest rate is going to be through the roof. Okay? But I personally, I like to do 700 or better. 750 plus is really going to get you the best results, because you're going to get the lowest interest rate possible. Yeah, interest is way too crazy to be having a 580. So, and if that is you, it's okay. It just means that you need to do the work before you go ask anybody else for their money. Become a better steward over your money before you ask them for their money, because if not, you're going to be paying crazy rates on that money to have it. Also, look into tax planning. That's looking at minimizing your tax liabilities. If you have a 750 but high credit usage, you may still be able to get away with it. But if you have high credit usage, that 750 ain't going to stay at 750 for long. I can tell you that. If you continue to have high credit usage, it will not stay at 750 for long. It will really drop to the low sevens. You'll be hovering between 680 to 720. So it's really important to get that usage down as quickly as possible. Or to make whatever moves you want to make while you're still at a 750, because before long, you will not be at a 750 no more. Where do you start if you're paying everything but have crazy student loan debt? That is a great question. It depends. And I will want to look at your whole financial picture to tell you where to start. I'll need more information. But when I look at paying off debt, when I do debt repayment plans, we do 3 different methods. So I look at the debt snowball, the debt avalanche, and the emotional payoff method. The debt snowball is paying off your debt from smallest to largest. It's proven that psychologically it works for a lot of people, makes them feel like because of those small wins, they can keep going on to get the bigger wins. It gives them momentum to keep on the path of becoming debt free. The debt avalanche method is my favorite because I'm a math nerd, and it allows you to pay the least amount in interest as possible while getting out of debt. And then the emotional payoff method is one pretty much I came up with, where you pay off the one that pisses you off the most first. So that one that, say that boyfriend wrecked your car, that ex-husband or that cousin you co-signed on, whatever the case may be, and now the car is in the Chattahoochee River, and they ain't getting it back, but you owe $8,000 because you co-signed. Pay that one off first. Just pay it off first. Why? Because if you don't pay that one off first, it's going to be the last thing you pay off, and then you're going to be telling yourself, even though you real close to being debt-free, that's going to, hell will freeze over before I pay this off and stuff. Like, pay it off first. Pay that one off first, so that obstacle is out of your way and you have clarity and can continue to move forward. So that's where I usually have clients start. All right, you're welcome. All right, and then financial software. So that's why I was saying, when it comes to bookkeeping, I love QuickBooks. I used to be a Wave app girl. They still have a free version, but it does not give me the data I need to make strategic decisions. it does allow me to be in compliance. So if you're looking to just be in compliance and keep your money and your expense at zero, go with Wave Apps, upload everything manually, categorize it, and at least you will have things that are in compliance so that we can get your taxes done right. Okay, if you're looking to be able to analyze your data, really break it down, have sub accounts, parent accounts, and be able to kind of map out the next few years, do budget and forecasting and all of that, then I would do QuickBooks. I said Wave Apps was the first one, waveapps.com. It is actually not an app, but waveapps.com is a website. You can do it that way, or you can do QuickBooks. Another thing I love about QuickBooks, you can track your mileage up there. You can capture your receipts. Even in the cheapest plan, you get to capture receipts. You can upload it. You can match it with everything. You can show what's going on. So, I mean, really and truly, I'm a QuickBooks girly. Until I find something better, that's who I always recommend for financial software. Other things to look into are things such as Live Plan. That is where you can literally map out the most robust business plan. And that is really detailed out, and also do projections for the next 3 to 5 years, and even have a month by month comparison of what you're going to do and how. So I really, really love Live Plan. That's where I built my business plan and built the business plans and for many clients. So that is something that I highly recommend as well. But you can also now have that feature in QuickBooks, but I don't like it as much as I like the one in Live Plan. But I will also warn, it's robust in the Live Plan. So if you do not have the mental bandwidth, because I done got tired in that thing, let me tell you. Sometimes you just got to come in, do 10 to 20 minutes or to an hour, and then get out. No, it is not free. It's like $50 a year, I believe, but that's affordable to me. $50 for or maybe it's $50 a month. I'm sorry, but I say $50 a year because I probably use it for like 1 month. Within that 1 month, you can build that business plan and get up out of there. Cancel that subscription, so you don't have to pay for it for the year. But it's really good to use. So that is like. And it will, it'll have the financial section, it'll have all the things. And bankers, they rant and rave over it. Especially since I was doing that before AI was as big as it is now. And they do integrate AI into Live Plan as well. So that is something to know. And it also helps you to compare yourself to others in your industry, to let you know how well you're doing or what your metrics should kind of be, and kind of like what some of those margins and those ratios and stuff should be for you. So those are things as well. And it connects with QuickBooks, so it can say, this is what you plan and this is what you're doing and this is the variance, and like, let's figure this out, right? So then you can troubleshoot from there. So I do really love that one. Our services, we do custom financial plans, tax preparation and planning, and bookkeeping or accounting services. I use them interchangeably. But we are really into advising our clients, being their strategic partner, reviewing everything with them, helping them understand what the heck is going on instead of just doing it and keeping them clueless. So if you're looking to be able to help us grow, you can also scan that QR code. That's just going to tell me, how well did I do tonight? Did I suck? Was I entertaining? Was I like the Clear Eyes commercial man? Whatever the case may be, you can scan it and let me know. It's internally. So if you don't like me, I'll know what to fix. But if you do love me, just copy and paste it on Google. If you don't, just let me go ahead and take the criticism and we're going to fix this thing and get it right? But if you love me, then let other people know so that they can come to me. So I'm always into making sure that I'm doing a good job with what I give people. But again, we're looking to advise our clients, help our clients grow to the next level. We can help you from startup to $20 to $100 million. That's what we're looking to be able to do. The custom financial planning is really 101, because majority of my clients started a business so that they have financial freedom, so that they can spend more time with their family, so that they can change the lives of their own and their family members and those that they love, so that they can make an impact on their community, so that they can vacation more, so they can get out of asking people for permission, so that they don't have to take a vacation when they quit one job and then start another one. And that 2 weeks is really so that you can go somewhere and like stop growing gray hair for a moment and relax. Instead, you can actually, live the life of your dreams. And so even though sometimes it starts off as a hustle and doing 8 to 12 plus hour days, we want to get you from hustle to strategic strategy and flow and grace and ease. So that's what we do here at BD Smith Wealth, where we build wealth God's way. You can scan that code to be able to book with me. I also put that link in the chat. Thank you guys. I appreciate being here with you tonight.
Awesome, Bree. Again, as usual, much appreciated. I say everyone in here take the opportunity to just scan that code, set up a time, have a conversation. Again, it's about being vulnerable, especially if we're looking to try to get capital. It's better to be here in the family and have an understanding of the finances and what we need to do next, rather than finding it out with a stranger when you have those conversations with these lenders who don't get a chance to know you based off of who you are. I get to know you because I have conversations with y'all, but lenders don't always look at it that way. Outside of that, please make sure you are also connecting with your consultants. Really important, making sure you guys get credit for it. And yeah, that's pretty much it for tonight. Our next class, again, why this is all kind of like a strategic and why it's planned out the way it is because you're going to be going into the next two classes with two potential lenders that have really awesome loan products specifically for startups, right? Yeah, it's something you guys might want to consider. And I just want, when you guys have that conversation, you've already got all those boxes checked off. So you're looking super professional when you walk in there, and you walk away with being able to have the choice as to whether or not you take this one or the other one, rather than having to take it because you have to. So let's not go in there underprepared. If y'all have any questions, shoot me a text, shoot me an email, let me know. I'm here to support you. If you're interested also in that other accelerator I told you about earlier, for those of you who missed it, there's an accelerator that's looking to help businesses that are looking to get their operations up, specifically when it comes to like tech and integrating technology into your business. If you get accepted and you go through the program, check off all the boxes, there is a $10,000 stipend that comes with that accelerator. So please let me know if you're interested. Shoot me a text, shoot me an email. Other than that, I won't hold you any longer. Have an awesome rest of your evening, and I'll see you guys in your one-on-ones.
Oh, and just real quick, if anyone did have any questions, I'm still here because I had this mapped out till 8. So I'll stay back and answer any questions anyone has until that time, or until everyone's gone.
Awesome. So for those of you that want to stay on for a little bit. If you guys got to go, talk to you soon.
Oh, thank you. I just saw this stuff in the chat.
Mm-hmm.
Hi.
Hey there. I thought that was you, Robin.
Yes. But I'm going to get ready to say.
What you going to say?
When you was talking about Microsoft, what was it what you was talking about on Microsoft?
Oh, on Microsoft, the Excel?
Okay. No, I think it was the program.
Oh, so I moved from Google Workspace to Microsoft. So I have Microsoft Teams, I have Outlook, I have what else comes in that plan? You get SharePoint, OneDrive. So that's like what my team operates off of. All of our emails are through like Microsoft. All of our meetings, our team meetings, and even my client meetings now are through Microsoft Teams. All of our like planning and stuff like that, we use the planner and the reminder app from Microsoft. So it actually integrates. We can literally like just right click inside of our chat and create it as a task for one of us to do, which helps us to stay on top of everything. So, I mean, there's just so many different things. We were able to get rid of Slack. We were able to get rid of Zoom. We were able to get rid of Google Workspace. And for the price that we paid for Google Workspace, we were able to get rid of all those other apps. So no more Slack, no more Zoom, no more Google Workspace, no more Trello, even though Trello was free, but no more of that. No more of like all of these other apps, no more Dropbox. So I saved thousands of dollars, hundreds to thousands of dollars just by making that switch, because I needed to make sure I had something that was compliant, that was secure, but also that like worked and allowed us to have like that efficiency and also professionalism. And so even though it's been a learning curve, sometimes with Teams, it's easier probably for people to log on to a Google Meets or a Zoom than it is Teams sometime. I can appreciate that and understand that. Still, clients have not really had an issue with that too much. It has all the same functionalities and we're saving money. So we will troubleshoot a little bit because we're saving money at the end.
Yeah, because I have Google Meet that I had paid for Microsoft that I had paid for 3 years. So.
Are you talking about Microsoft Office?
Uh-huh.
But Microsoft Office is also all included inside of
it's the 365 and all of that, right?
That's different. So like,
okay.
Personally, I still personally pay for Microsoft outside of my business paying for Microsoft. That's because I have so many files, even from like college, all my personal pictures and all of that in my OneDrive and connected to my phone and stuff like that. So that's something different. That's not my email or anything. That's just like pictures and storage and document storage. And it's like, being able to use PowerPoint, Excel, Word, things like that. So
yeah, I have all of that.
Yes,
I have the business one.
Oh, okay.
Microsoft Business, yes.
So you use Outlook for your email and stuff.
Yeah.
Okay. Well, then you good.
That's right. I had the Outlook for the business, and then I also have it for my personal too. I don't know how they did it, but I have both, but it's under one.
Okay.
Yeah. So. And then you was talking about another software that you said to invest in. What was that one?
I think I just talked about Microsoft. Do you remember what I said it was about?
I think it was got something to do with finance.
QuickBooks?
Yeah,
I have
QuickBooks.
that. Yeah. I have QuickBooks.
Yes, you do. So yeah, QuickBooks is the big one I kept talking about. I did mention Live Plan.
I think that's what it is. What is Live Plan? I didn't really hear that too much.
You can create your business plan inside of there. And you can also do like financial projections for the next 3 to 5 years, depending on which plan you pay for. It will also integrate with your QuickBooks to see how you spent money versus how you said you were going to spend money and how you did your budget and your projections to hold you accountable. You can also write in like your milestones and different tasks that you're going to check off and do throughout the year, like major items that you're going to do that year, and then check those things off according to in your plan and like the date by each date and things like that. So that is what Live Plan does. It's robust. I love it.
And that's expensive as well?
It's $50 a month. So expensive is relative. I mean, you could see that as expensive or you could see that as cheap. It just depends. But you can also just do it for 1 month, see if you like it. Because like I said, with everything, you're looking for a return on investment. So if you do it and it allows you to get a $20,000 loan, I think it was worth the $50. If you do it and you never log in, then you just wasted money. You put in $50 in the shredder. If you do it and you have more clarity about your business and you're able to now hit goals and have a strategic plan forward, then I think it's definitely worth it. So it just depends. Those are things that I use that I know work though.
I know this may be a crazy question.
No such thing.
Yes, it is. Even though we work together, you think it will probably help me? Or I should wait?
I will say you should wait. And I say that because
Okay.
I know how you and technology get along.
That's why I say
Yeah.
it's a crazy question.
Yeah. I would just wait just because I know how you and technology get along and I don't even want you frustrated and then calling me about that thing. Because I know I'm going to get the call. And you'll be like, Bree, now you told me to sign up for this. I
I
can't
would
get this
say
to
you
do
told me
that.
to sign up. I would say, Bree, I got another streak of gray hair.
Yeah, I would wait. But if you want, try the free trial and see how you get along with it. And if it frustrates you too much, just cancel that thing and get out of there. I think they do a 2-week free trial.
No, I'll wait. I'll wait till I finish navigating and QuickBooks.
Okay.
And that way I ain't got to worry about too many being in school.
No
Thank
worries.
you.
You're welcome.
Anybody else had any questions? Anything they wanted to?
Hi, this is Corey.
Hey, Corey.
Oh, there we go. How you doing? I help out with a nonprofit. Do you work with nonprofits at all?
I do, but I usually refer them out. I'm a for-profit girly. So it just depends. I don't work with a ton. I work with some. If the vision, if the mission is big enough, or if it's something that I really love, then I will. Like something I just got done doing this weekend. It was for like a sorority and stuff. And they're technically like a nonprofit. So I do work sometimes with nonprofits. It just depends. Majority of the time I refer it out though.
Okay. And did you, I missed whatever we were supposed to scan.
Oh.
What's the name of the business?
BD Smith Wealth.
BD Smith
Wealth. Yes. And
WELL?
Hold on once. BD. See, I wish this thing was showing me right. But BD Smith Wealth. WEALTH. Yes.
Thank you. BD Smith Wealth.
Yes, ma'am.
Okay. Thank you.
You're welcome. I don't know where the little chat box thing went. I'm not, like I said, I switched. So it'd be hard for me to even find where did chat just go. It wasn't. Yeah.
That's okay. I can Google that and look it up.
Awesome. But yeah, it's just bdsmithwealth.com and you'll be able to book a call, or if you're looking for the one to give us feedback, that one was a code to scan.
Oh, okay.
Yeah.
Oh, okay. Thank you.
You're welcome.
Have a good night.
You too.
Bye, Tyler.
Anyone else?
This is Jeannie with All Four Paws. Quick question. I was trying to schedule the consultation, and after I get to where it says I submitted through the Get in Touch, but was that it? It didn't show confirmation or calendar or anything.
No, it should be the free consultation. Like did you like pick a date and time?
I hit the consultation. It's saying 10 a.m. to 10:20 on Friday. I enter my name and details, and there's not another action button there.
It should be scheduled meeting. Let me see if I can share again. See.
Oh yeah, no, it doesn't look like that at all.
Oh.
Free consultation. The discovery call. No. I'll try it from my computer instead of my phone then.
Okay. Thank you for letting me know that though. I will have the team did say there was an issue with mobile, but they thought they fixed it yesterday. So you letting me know that, we will get that together. And you said you're with All Four Paws?
Correct. That's the pet wash and spa.
All right, where are you at?
Suffolk, Virginia.
Oh God. Okay. You want me to drive? Okay. I come to Suffolk every Sunday for church. But
just bring your dog before church and pick him up or her after church.
Look at that. That's a drop off right there.
Okay. Now we might need to do that because my Bella Boo, my husband talking bad about her, and so
I'm not open yet though. You gotta get her go.
Oh, well, get open. I'm telling, she need help. I got a poodle, and I feel like sometimes we be matching like with this curls and stuff. So yeah, I gotta get my girl right. So I'm looking for a new groomer that ain't trying to pretend like they a vet and talk trash about me every time to my face too while I'm paying. I ain't got time for that. So I'm looking for a new one actively.
Okay.
So let me know when you open, and you will get her.
Will do.
Yes, ma'am. All right.
Everybody good? Any other questions?
I have a quick question, Bree.
Okay.
I scheduled I'm sorry, this is Rosa Williams with Purely and Thursdays. I scheduled a consult with you for, I think it was next Thursday.
Awesome.
Before our consult, what would you need from me to have prepared for you to make things a little easier?
Okay, so you clicked almost all the buttons. I would say, really, those meetings though are for me to really understand you, understand what you need. Before I look at any paperwork, I just want to understand you, what you're looking for, what is going to be valuable to you or not. Say for tax prep, we'll end up giving you a link to add your documents to our portal. We can review that. So if you want, I can have Annalyn give you access to the portal before that so that you can submit it. Full transparency. My staff is in the Philippines, so I will have a contract that say, hey, I have staff that is vetted, background check, but they're in the Philippines. So you'll just have to sign off on that when we're dealing with anything, dealing social security numbers and things like that. Check all boxes, cross all T's and dot all I's. But she can give you access to the portal. I can review it, and then I can prepare a proposal just for tax prep before we even chat. Financial projections and financial planning. That's where me and you are just going to talk about what your dream and goals are, and more about your business, what you're doing and what you're into. So just come knowing kind of what your goals are, what you want to accomplish, what looks like success to you in this partnership, and then we'll be able to chat it out.
Okay. Well, I will be, like I said, I scheduled for next Thursday. So
I see it.
Whenever that link is set, I can go ahead and send over everything that you're looking for. That way we can make the best out of our consult. Oh, well, I'm sorry, you used the word partnership. The best out of our partnership. So I'm with it.
Yes, ma'am. Yes, ma'am. All right,
Okay,
I will.
Thank you. I appreciate it.
You're welcome. And I'm going to tell Annalyn now to send you the link.
Okay, thank you. Y'all have a good night.
You too.
I think that's everybody, right? Anybody else?
I'm about to roll out.
Yeah.
All right. Oh, Nicole, are you the person we talked to about this accelerator with a $10,000 stipend?
I mean, you can reach out to me. I can research it for you.
I saw you said email me about that. I'm like, hold on.
I just wanted to be a contact point.
Okay. I'm about to say, I like the sound of this. What is this? Kiva? They get $10,000 from Kiva if they do it, or do they get $10,000?
No, it's actually one of our community partners. I believe it's ASEAN. They're another bank, but they're doing a program specifically for I can tell you right now. Let me just
send me the link. I like $10,000. I follow rules.
Yeah. It's called the Ripple Digital Leap Forward, and it's
I think I saw it on LinkedIn.
Yeah, so it's definitely a good look. I'm trying to continue to do the whole them send us people, us send them people. Seeing how that works out. But yeah, you get $10,000.
I'm sorry.
Ripple. I'm gonna send it out in an email.
Okay.
But it's Ripple Digital Leap Forward Accelerator.
Okay.
And the application just opened up on the 18th, and the deadline is so you have 30 days, the 18th of next month. So we have some time, and I'm gonna keep pushing it. I'll put it out with the link in the email, and then of course I was just gonna keep bringing it up as we go through for those of y'all who are still interested in it. Yeah.
Well, cool. Yeah, we can pass it on.
Yes, I'm very interested in that.
Yeah. Well, all right, y'all. Won't hold you up any longer. Thanks again for staying back and asking questions. It shows that you're taking your business seriously. And if any questions come up, once I send an email out, just feel free to reach out to any one of us.
All right.
Thanks, Bree.
You're welcome.
Thank you, Bree. Good to see ya.
I would have one question.
Yep.
This is not for today. It was for last Wednesday's assignment, AI. So do we send that to you?
Oh, no, so you don't have to send that assignment. That was purely for you just to kind of like get a better understanding on how to use it. If you do have any questions, though, you can reach out to Emmanuel or just let me know and I'll make a connection between you and him as well if you wanted to follow up with him. But yeah, that exercise was just for you, just to kind of get a better understanding of how it all works.
Oh, okay. Because I had a session with him yesterday. And
Okay.
He walked me through everything. So I just had do the Canva part. But he told me to check with you first to see to go any further than that. So that's why I was asking, did we need to turn it in to you first or?
No, not at all. If you want to take that next step to Canva, feel free. If you get caught up with it, just reach out to me directly. We can always set up a session. I'll hop on with you.
Oh, okay. Thank you.
No problem. No problem. All right, y'all. Good night.
Good night.